Hi, everyone. Thank you for joining today's webinar. We're going to start right at 1 o'clock and we'll do some housekeeping items. We do have a large audience today. We have close to almost 400 people registered for the event. So I do request if you have questions to type them in the question feature. And we will be recording today's session, but feel free to stretch your legs. We got roughly 2 more minutes. Thank you. Hi, everyone. This is Caitlin Mulhern with the Federal Home Loan Bank of Boston. If some of you are familiar with working with me, look forward to working again with you this year. And if you're new to our organization or our homeownership assistance programs, welcome. Really appreciate you taking the time out of your day to take our annual training. We do have a large audience today, so we will be taking questions. So if you have any questions, please type them in the question feature opposed to the chat. And we will also allow time at the end. But if for some reason I don't get to your question right away, it might just be coming in a future slide. And if there's something that's a little more granular, just due to time and the large audience, you'll have my contact information if it's, a loan scenario or something that's a little more detailed outside of today's training. You can at least reach out to myself or my team. And I just want to get a sound check before we continue anymore. So if everyone could just use the raise hand feature, that would be wonderful. I just want to make sure everyone can hear me. Awesome. I love it. Thank you so much. You will see that we have put 5 handouts in today's training. One of them is a PDF document of today's PowerPoint. We are going to be recording it as well. So if you have other people in your organization who couldn't attend the live training, they have that opportunity. Usually it takes us a week or so just to get that up on the website, but at least you have the PDF materials. We're going to reference all the documents that are in the handout, including our disclosure, certification of income. We're going to be talking about our income guidelines and just a helpful quality control checklist. I love checklists myself, so hope you find that useful too. All right, so with that, we're going to conduct today's training. And like I said, thank you so much for taking the time. This is an annual training that we provide for our members of the Federal Home Loan Bank. And if you're attending today's training, that is because your institution has applied to offer the Equity Builder and Housing Our Workforce program. And these are great programs to help your borrowers sustain successful homeownership. And as I mentioned, we will be recording today's training. We have a lot of information to cover today. I'm not going to go through every agenda item, but the goal is to talk about the enrolling homebuyer process. So that's part one of registering and reserving funding for income eligible buyers for our Equity Builder or Housing Our Workforce program. We're going to give you the ins and outs and how to work through the programs, what are requirements. We refer to your institution as a member, and the home buyer is technically your customer. And that application for your home buyer, we always refer to at the Federal Home Loan Bank as the enrollment. So that's what we're going to be covering today. And if you aren't familiar with the programs, we have two that we're going to be talking about today that your institution has applied to offer. That's our Equity Builder program. It's our oldest program since 2003, and it provides down payment and closing cost assistance for low to moderate households with incomes at or below the 80% of the area median income. We'll get more granular about what that looks like, and it's definitely different than what your qualifying income is for your first mortgage loan. And then the Housing Our Workforce program, that is an additional voluntary program that the Federal Home Loan Bank of Boston offers outside of our regulatory requirement. That started in 2019, and it also provides down payment and closing cost grants, and that's for households slightly above that 80 and up to 120% of the area median income. And just to give you an idea of the impact of how these programs really can help your borrower purchase their first home, is really just looking at the numbers. And this is a scenario, ignore the fact of what the mortgage product specifically is, but it is a comparison of a lender last year that used a 30-year fixed and looking at the buying power and savings. So this year, the EBP grant is a little over 30,000, and just looking at the decrease in that loan amount, um, it has the potential to lower the monthly P&I, which is reducing that housing ratio or that front DTI. Maybe that gets your borrower an approved eligible. Maybe it gets them better pricing. It lowers their loan to value, and essentially that translates also to that home buyer, saving in their monthly payment, as we know that some buyers are able to potentially sustain their monthly payment, but they're draining their 401ks, their savings to be able to put down payment. So to be able to have access to either the EBP grant or the HOW grant can be extremely beneficial. And as I already mentioned, it's for down payment and closing cost assistance. So this is just an example we like to give people showing the success. And one of the questions was, are there any restrictions on what the funds can be used for when it's used for rehab assistance? So that's a great question. So it is for primarily down payment and closing cost assistance. However, we do allow EBP only to be used toward rehab. And if you are interested in offering that, I definitely recommend reviewing our EBP HOW procedures, because there are some additional documents that you need to deliver to us before we can disperse the money to your institution. But that's for EBP only, and we talk about that in our disbursement training in a little more detail. But very good question. So this is just a roadmap on how do you start to finish work on reserving money for your buyer, and then closing your loan, and then requesting that disbursement. So high level, you always have to have an executed purchase and sales agreement, and that is a way for you to enter that income eligible household into our community lending platform. And that we call the enrollment process, which we're training on today. That's your application for your individual buyer. You're the gatekeeper and the one who's going to be submitting on their behalf. We don't work directly with your home buyers. And it is a two-step process. Enrollment is the first part, which is the income and reserving based on that property address, which is why we need a fully executed PNS. And once we complete our review, your institution will then close and table fund the grant. And then once you receive all of your closing documentation, your organization will request the disbursement, which is that reimbursement into your institution's ideal way account with the Federal Home Loan Bank. So our allocation schedule this year, first off, we will be disclosing what the final numbers are for each program effective April 1st. But just to give you a little background, each of these two programs, EBP and HOW, they have their own pool of money. And the goal is that these programs run concurrent and have the same funding periods and dates. And they're separate pools of money for two reasons. Number one, they're two different programs. Secondly, EBP is a regulated program with the Federal Housing Finance Agency, and we are required under our regulatory requirement to allocate 10% of our year earnings to specifically fund affordable housing. And then we slice and dice that 10% into 15% that goes to what we're required to refer to as our set aside, and that's our equity builder program. And the HOW program is a voluntary program where we started as a pilot program actually for 3 years, and we've continued to make this a permanent additional program, especially where New England is in a higher costly area. Even if people do have higher incomes, it's very challenging to be able to buy. So that gets approved annually, and it's a separate allocation. So stay tuned on that. But we're going to this year be operating on a 4-month cycle, April through July, and we're going to be releasing increments for each of these programs on the 1st and the 15th of the month. And obviously you can see in June, depending on where it falls, if it's on a Sunday, we just have bumped out the business day. And each of your organizations will be receiving a maximum threshold, but the funds are always on a first come, first served basis. And any of the money that is reserved, and for some reason, a home buyer, maybe the appraised value doesn't come up to par, maybe there's an underwriting issue, anything that is withdrawn, it gets released back into what we call the general pool. So there's plenty of opportunity for funding. And the first release is April 1st, and that's when you can begin reserving and entering in enrollments. So I already mentioned traditionally what the eligible uses are, but just to get a little more granular, when we're talking about down payment, that's pretty straightforward, but the closing costs can include, as of this year for both programs, prepaids and escrows, and interest rate buy downs up to 2 points. And we do understand sometimes when we're looking at points on a specific loan, that does vary just depending on the loan amount. You might have your own spread that you need to be able to collect in your pricing. So that's our maximum threshold where our funds can be used to be able to reduce that interest rate for that customer of yours. And then it has to be a purchase within New England, and the property types range from 1 to 4 family homes. That also does include townhouses, condominiums, cooperatives, and any manufactured housing. Also, we don't have any restrictions if that property address has an affordable restriction or a deed restriction or a covenant, depending on where you are in New England. I know the vernacular is different. In Massachusetts, a lot of ours fall under 40B, but any affordability restrictions, that is fine with us, and we see a lot of that. And one question is, what is the purchase price restriction? That's a great question. So we're going to get into the comparison. So I'll explain that part as well. if you're comparing the programs side by side, focusing on the top part, it is number one, the area median income thresholds are different. The grant per household is also different. So for EBP, you see that it's a little over 30,000 and some change. That is what the FHFA continues to monitor and administer how far we can go up to. So that's why you see that funky number there. It's based on their analysis on the national housing level, and then also they look at different incomes. And then for the HOW program, so it's a voluntary program, and the maximum amount last year will also carry out into 2024 if you use that program last year. It is 25% or up to 10% of the sales price, and that's the lesser of the two, and that's pretty common with some other housing finance agency products that are out throughout New England. So that's where we got that 10% lesser of the two information. And then, as I mentioned, your maximum funds, they are on a first come, first served basis, but each bank and credit union providing the funding availability has up to 350,000 for EBP and 260,000 for HOW. Both programs have different minimum down payment contributions, and it does have to be the home buyer's own funds. EBP has historically always been $500. That's because it's a low to moderate income grant. And then HOW, if you did use our program last year, it used to be 3%, and now we've actually reduced that to 1.5%. But it does have to be the home buyer's own funds. If there's any gift money, that's fine. They can have that gift money outside of our minimum down payment requirement in order for them to access our grant. I already talked about what the use of funds are. And then when you're looking at the purchase price, someone had a question on what is the purchase price restriction. So EBP has no restrictions, but the HOW program, we do have a purchase price limit, and it's based on the IRS mortgage revenue bonds. And we will continue to monitor if they have updated that for this year. And if for some reason they make some adjustments, we will adjust, but we are going to be operating under what last year's were. And I believe they're effective of last July. So it just depends on when that data is available. We have a question about property types, and I think that relates to the slide before this. Manufactured housing, does that allow single wide, double home land, or only double wide if there's any restrictions? So for people who are offering manufactured housing, we don't have any restrictions. It's just that the homeowner needs to take title, and if it is a single wide or a double wide, you just have to provide an appraisal showing that it's either wheels up, axles down, or it's permanently affixed. And if you have any housing products that have park programs, yes, you can pair that. We see that pretty common. And then does EBP, so one of the questions was, does EBP have to be for New England as well? So our regulation, and remember, EBP is regulated, HOW is voluntary, HOW has to be for New England. EBP typically is only offered in New England, but if for some reason an institution lends outside of New England, that has to be vetted prior to your organization reserving and applying. It's a separate carve out that you need to submit to myself for review. Just to give you an example, we used to have some lenders who offered in New York and California, and you can refer to that in our procedures. I cannot recall which page it is, but I can also circulate that information. And then one of the questions is what sort of specific prepaids can be included? Prepaid, interest, taxes, homeowners insurance, appraisal. So yes, that's what we are considering in there. So we used to say that it had to be customary loan costs. So that was typically in the top section, and it was excluding prepaid interest, tax, insurance, escrows. But for both programs, because it's very common in a lot of down payment products that are throughout New England. We will cover that. And then the other information at the bottom of the grid is pretty straightforward. We haven't really made any changes other than EBP is for first-time homebuyers only, and how they're not required to be a first-time homebuyer. However, the homebuyer must sell their current primary residence, whether they do it before or simultaneous closings. They can't convert that into an investment property. All right, so requirements for your home buyer, they're required to execute our disclosure, identify the entire household and all income streams. So everybody who's going to reside in the property. This varies from your first mortgage underwriting qualifications, and then based on that information, determining the area median income limits. They do have to have a fully executed PNS. It can only be for primary residences only, and just making sure that they contribute their own funds toward their purchase, whether that is in the earnest money deposit or at time of offer, or it can be a combination of that and cash to close. So when you're in our system, to be exact, if for some reason they have not met that, you're going to get a notification that it's going to remind you have not met that threshold, whether it's the 500 EBP or the 1.5 or how, and just be mindful that you need to make sure that everything ticks and ties to meet that minimum contribution, at least at time of disbursement, because then that could potentially have an impact if your institution will receive the grant. All right. Just gonna monitor some of these questions where are coming up. So I want people to know that we will get to all the questions. Just confirming, yes, EBP is for first-time homebuyers only. First-time homebuyer has large gifts. Can they still qualify? The answer is yes. We don't perform asset tests. Like I said, they just have to meet the income eligibility and then have that minimum homebuyer contribution. And yes, in the past, it was the first 1/3 of enrollments for first-time homebuyers, but effective this year, EBP is for first-time homebuyers only. I see a lot of things about non-occupant co-borrowers. We will be getting into that today. And they do have to complete first-time homebuyer education and counseling. We're going to get into some more detail about that because I see a lot of questions flying in about that. And I believe we had this slide in our application training, but a lot of questions I'm getting around first-time home buyer. So we do go by the HUD definition, which is hasn't owned a home in 3 years, single or displaced homemaker. So when you're interviewing your potential home buyers, specifically, I like to call this out for loan officers. Take the time to review the disclosure. Let them know that the first 4 pages are informational. Let them know that they are putting all this information in writing, and our disclosure is basically our Fannie Mae 1003. And we're different from mortgage qualifications, where for everyone who resides in the property, and we're all in for everybody's income, which does include adults that are 18 years or older. And you need to validate that income household against the disclosure. If somebody has no income and they are 18 years or older, in the handouts, I did provide the zero certification of income certificate. And some other questions that I'm getting also is that some other considerations, and I definitely recommend reading top to bottom our income guidelines, but some other considerations when you're looking at that household composition. If your home buyer is an employee, we do require you to have a certification on company letterhead saying that they don't have any affiliation or any access to their grant submission for EBP or how. Non-occupant co-borrowers we do permit, and we have a very detailed instructions. You don't include them as the total occupants to reside in the property. Therefore, we do not include their income. However, if there are some unique circumstances for some reason, maybe your debt to income ratio is a little high, that's why you have that non-OC, and you're using them as a compensating factor, saying, X person is going to contribute, $500 a month toward that mortgage payment, we would consider that income, although it's not traditional from first mortgage qualifications, but that's just a unique circumstance that we have seen in the past. If they're a full-time student, first off, we cap them off if you provide transcript documentation. Like I said, 18 years or older is what we're considering income. And then for the full-time student status, we automatically cap off the annual amount at $480. That 480 comes directly from the HUD guidelines, and the HUD book, if you will. And if they're a first-time full-time student, excuse me, but they're head of the household and they have other jobs, we do include all their income. We don't cap it off. And then we have some detailed information when it comes to your household composition. If you have situations where there are minors in the house and they have 50-50 custody. So just like I said, read up on that, but I like to call out these considerations, which we get a lot of income scenarios for. All right, I'm going to see some other questions in here that are related to this. Oh, one question just going back to for the house specifically is the IRS mortgage bond limits. They are on our website, so when you go to the how page, I believe it's under the eligibility hyperlink, you'll find them there. And they, like I mentioned already, that they are the same ones from last year, just because the IRS has not made updates. All right, so when we're looking at the income calculations, so best practices, whenever you're going through the qualifications, I recommend that you always do a manual underwrite outside of your, oh, wonderful, thank you. Thank you for sharing that, Kevin. You do a manual underwrite because we are prospective. So I like to tell people we're a hybrid of Fannie, Freddie, and HUD. And the one difference that we are outside of Fannie and Freddie is that we're prospective. We do not care about seasonality. So if somebody hasn't been at their job for 2 years, we're all in for every income. We annualize it over 12 months. So this varies significant from your secondary market underwriting. And if for some reason, when you're entering somebody into our system, you've done your manual underwrite, and if there's some unique circumstance for like a scenario that for some reason our system can't be a one size fits all, I encourage you to put an explanation. Sometimes, especially in New England, there's just a lot of income streams that we can't foresee, but our income guidelines talk about very granular of, if you have pay stubs, here's what we're looking at. If you have a Fannie Mae verification of employment, we're all in for everything. And also, if we are using if you're using a third party verification of employment, we treat that like pay stubs. We talk about seasonal employment, which we do strongly recommend having a Fannie Mae VOE and having that employer letting you know how many months out of the year. So that way, when we're projecting out, we're not, over projecting or under projecting. And we're going to actually get into the HUD income limits. So just to give you an idea for both of these programs. So as of right now, let me take a step back. So as of right now, we're using the 2023 HUD income limits, and that is until HUD releases their 2024s. This is pretty typical in the first month or so, give or take, when we release funding, and that's just because the timing of our programs is really to cater into preparation of spring market. So we do provide notice when we are going to be onboarding the 2024s. And if we ever have any situation where your customer is kind of in between, we work with you on that, because the goal is to get people qualified for these grants. We're not looking to, deny people. We really just want to make sure that these grants are going to the income eligible households. So to give you an example, in Boston, I like to use this example for a household of 4, just to give you a little more color on this. Say this is a household of 4, you're doing your first mortgage, you have 1 borrower, but there are 2 adult households, 2 adult household members, and then 2 minors. We would consider that a household of 4. So we're going to want 2 sources of income. For example, if they were just wage earners, so we're going to want their pay stubs or VOEs for that. And if you're looking in the Boston area for EBP, the example would be 118,450. And if they were a dollar over, they would be eligible for HOW, and the HOW goes up to 120. As you see here, we have to do a funky calculation because HUD doesn't go up to the 120. So in order for us to project out and offer that, we take the 50, so you have to take that 74,200 number, you times it by 2, and then, to get it to the 100%, times it by 1.2. So this example for a household of 4 in the Boston area would be $178,080. And the reason is because we want to be able to have one resource when you are doing a manual underwrite. Maybe your loan officer's on the road, they don't have access to the system. There's so many different programs throughout New England, because we're not just for one state in New England. So to have a one-stop shop resource, that's really the why and how we have gotten these figures. And then EBP has always been at or below 80% of the HUD area median income, because as I mentioned, that is a regulated program. So your requirements as the member. So you have to submit all of your documents online. We don't accept anything in email. If for some reason there are some technical issues, reach out to myself and the rest of the team. Manage your pipelines, especially if you have multiple people that are registering and reserving income eligible buyers, and then maybe you have a couple of other people who are doing any of the conditions. Maybe someone on our team requests additional documentation. Just really make sure that you're looking at your pipelines, especially if you have buyers in EBP or HOW, or if for some reason you might have thought they qualified for one and they really belong in the other program. You can't switch programs after your enrollment is fully submitted. So last year we decided that it's one member application. That also gives you access to both programs. So when you begin entering this information, for example, maybe you think your buyers for EBP, but they're really for HOW, it will let you know that they don't qualify for EBP, but they're allowed to go into HOW. It'll then move you through as if it's going to be reserved under the HOW program. And you just have to make sure that the differences, the home buyer contribution, anything that is indicative to the HOW program opposed to the EBP, that you have that fully vetted. But once you've submitted that buyer for our review, if for some reason they're over or they're under income, you can't just move into the other program. You'll have to start that home buyer from scratch. Some other things to point out is that we do have a front DTI, or housing ratio, of 37%. I know in New England that is extremely challenging. So we do allow compensating factors. So if you're in Massachusetts, kind of similar to the MHP1 mortgage, and our procedures do have detail, but just to give you what our system will ask you for is what's their current rent payment, do they have additional reserves, 2 to 6 months range, give or take, after the closing. We don't need the statements. It's just really you providing an underwriting narrative, just letting us know that based on the information and where you're seeing the full 1003, you're just letting us know like how they can sustain this home ownership. And then the other thing would be is, do they have minimal back end debt? Because we don't look at credit score, we don't perform asset tests. We don't care about the back housing ratio. I mean the back end ratio that does factor in other loans outside of the mortgage. So we're really looking for you to just tighten that up and really evidencing and documenting your home buyer's ability to repay. If there's a related party transaction, whether it's, a family member selling to another family member, or if it's a renter landlord relationship, you just have to select that there is a related party transaction and confirm the appraised value, just to make sure that our money can never be used to bridge that gap between the appraised value and that sales price. And then provide us with a purchase and sales that has a closing date at least 15 business days upon the submission date, because that is our turnaround time. We do a 2-tier review at the Federal Home Loan Bank, and we just want to make sure you're being thoughtful and not jeopardizing your buyer if they are really close to their closing date. I'm going to pause and take some questions. I do see a lot of them. The first annual insurance premium to be paid with the grant. So if that's considered under the prepaids and escrow section, then yes. I just want to make sure people know what that is. So that section that is, I believe it's section G and F of the closing disclosure that we're referring to. Yes, we will cover that. All right, if a borrower puts down EMD funds, can they get the money back at closing? Great question. So no, they cannot. Any money that they've put down, if it's above and beyond our restrictions, it has to stay in the transaction. And then can we secure funds with an offer to purchase versus a PNS? Unfortunately, no, we do have to have a fully executed PNS, and that's just because the money is on a first come, first served basis. Just to give you an example, I think we have 159 banks and credit unions throughout New England that are going to be offering this program. So that's why it really does have to be a fully baked file, and where it is income eligibility based, and there's a lot of underwriting qualifications that we don't look for. The PNS really is the driver, just because if that property falls through, they would have to kind of go through the whole process again. All right, what else? Are employees of our credit union eligible to apply? Yes, so I did answer that question. So yes, if they are your employee, we do permit that. You just have to provide that executed letter saying that they have no affiliation or any access to reserving the grant and looking at their file with us at the Federal Home Loan Bank. And that is, I believe, the household composition in our income guidelines is on pages 3 and 4. Can these funds be used as part of the home ready product? So we do not have any stipulations on mortgage products unless if they're ARM products. And if you look in our procedures, we talk about that. But yes, people use Fannie Mae Home Ready. You just want to remember that we have our own qualifications of minimum home buyer contribution. You're just going to need to do your due diligence on that secondary market, because we're not affiliated with that. But yes, we do allow that. Right, some of these questions I did answer. Going back to the manufactured housing, the home can't be on leased land? So that's actually incorrect. So we do see a lot of ground leases. You just want to provide that documentation to us and then treat that as if it's a second mortgage payment. So that way we know we have that home buyer's housing ratio as accurate as we can. And yes, so we did last year release money April through June. We are now adding July for this year. I have a question about income. What about child support? Yes, we do include child support, and you can refer to that under our income guidelines. We're all in for all income, and I will say that I think our income guidelines are extremely detailed. Like I said, we're a mashup of Fannie, Freddie, and HUD. So some of the things might deviate from what you're looking at on your first mortgage, but we provide as much detailed information. And to answer, is bonus income annualized? For example, if they receive a large bonus at the beginning of the year, you would need to get something from the employer. If it's a lump sum bonus, there would need to be something in writing, because if we don't have that and the pay stub just says bonus, it doesn't say lump sum or anything that's indicative that we should not project it out, we would. Okay. All right, so once you've submitted your enrollment, if for some reason we're missing any information, for example, if you've given us not enough pay stubs, maybe things that are outdated, we're going to put the file, what we call, into member action required, MAR status, because we are very acronym heavy, hence why we refer to everything as EBP and how and MAR. So we require certain information. If it's missing, we'll put the file back to your institution. You have 10 business days to either provide that documentation or clarify. Sometimes we might just need something in writing just to tick and tie the file for compliance purposes. And if for some reason, you don't submit the information, that home buyer can potentially be denied after that 10 business day. And we do have in our EBP how procedures an extension policy. So if for some reason, we understand that if it's an extenuating circumstance, maybe you're unable to get a hold of your customer, you need more time, whatever we've requested, just reach out to myself or the home ownership team and we can work with you on that. But you will receive a notice at the 5th business day if we don't have any information, and then at the 10th business day. So if they're first-time home buyers, which for EBP, it has to be a first-time home buyer, how does not, but first-time home buyers do have to complete the education and counseling, and it's the certification is not required at enrollment, but we like to train to this because they might have already taken this course prior to securing that mortgage with your institution, and you're required to document it at the disbursement requests. We do have our updated list for this year. We take it from these sources listed in blue, and we do permit online education, and that's only through eHome America, Finally Home, or Framework. We don't currently allow for Freddie. Fannie, if you have a Fannie Mae home ready, feel free to just reach out to me. I can make a one-time approval, but at this time, it's not on our list, although I'm in the process of kind of looking at, they've done some significant enhancements, but we also do not accept the MGIC online education. And we do prefer that when they're doing the online, what we call a blended approach, that they're going through an approved agency who typically gives them a code and they can do the online modules, and then it requires them to take the counseling because that's tied to our regulation. So if for some reason someone goes directly to Framework, you want to make sure that they take some counseling component, and we really put that on your institution. So here's an example of an acceptable certificate that shows that they took it through Framework, and then they worked with Mass Affordable Housing Alliance, which is on our approved list. And if you ever have questions, if something, maybe there's so many subsidiaries out there that we can't necessarily foresee. So we do our best to get the most robust list, but always email us. We're happy to take a look and just ensure that everything's good, because especially if you're table funding the grant and then you're requesting disbursement, you want to make sure that everything ticks and ties in that area. So procedural reminders, home buyer reservations are specific. So if for some reason you have a buyer that's reserved, it falls out, you can't just swap out home buyers. We need to withdraw that formally. It goes into the general pool, and then you would have to enter and reserve that other home buyer and try to go for the funding. But it can't just go automatically to your institution. I also want to note too, we know home buyers are super savvy, and they might shop around. So maybe they're working with lender A and they've already submitted their reservation. They decide they want to go to lender B, who also offers these programs. They can't just move that reservation. So we let people know that it's tied to that home buyer with that original bank or credit union who has reserved that grant money. The subject property can change. We do allow up to 60 days. If a property falls through, you just notify us to let us know. Have 60 days to find a new property, and then you just want to make sure that that property is still in that county, because obviously the income qualification, especially if it's already been approved and reviewed, if they're going from one county to another, that income limit can look very different, and we just want to make sure that they're still eligible and they meet that income threshold. Please don't send placeholder documents. I know a lot of people have uh, done that in the past, but it has improved significantly. So thank you for that. If for some reason you don't have all the information, you can still access the system and begin entering your shell file. It's just we need everything on our end to be able to complete our review process. We do a good job at turning these around, even sometimes 10 calendar days, and just really making sure that you're being thoughtful to that when we're releasing money, we have multiple programs, we have multiple banks and credit unions at the same time reserving funding, and just making sure that if somebody's fully vetted and they're ready to reserve the money, that you're not just sending placeholder information just to lock in the grant and then uploading it at a later date. And then approvals are valid for 90 days. So once we have approved that enrollment, you have 90 days to close your first mortgage and submit the disbursement. We did make some changes to our extension policy for both programs. I recommend taking a read in our EBP how procedures, it's in section F. I think it's time limits and extensions is what we have it labeled. That will give you all the information about if the property's new construction. We can extend that out. You just have to explain what is the nature of the extension request. And I can actually say for this year, if you are heavily active in our HOW program, we used to have to make HOW fund by calendar year end. We are allowed to carry it over into the following calendar year. So who on that? And you'll see all that information in this year's procedures. So tips and tricks. Don't ever promise the funds to your homebuyer prior to receiving our grant approval. It's always on a first come, first served basis. Once you submit that enrollment, even if it's subject to our review, you have reserved the money officially. So if for some reason we need more information, you're still locked in for that individual homebuyer, but don't let them understand and appreciate, yeah, you have this grant, promising it up front, telling them that you reserved it and they have it, because if for some reason they're not income eligible, you want to just make sure you're being realistic in that expectation. But do promote the program and help your home buyers in need. And we give marketing materials that are in the community lending platform, so that way buyers can know that you have this program. We list all our banks and credit unions on our website, so that way if home buyers are just perusing our website, they know who can offer EBP or how. Do not provide more documentation than requested. I can't say that enough. We're all in for income, as I mentioned. So if you decide you have a W-2 earner, you're giving us pay stubs and a VOE, we're going to look at both, and we're always going to go the higher of. And that's definitely very different than your secondary market, because you're about seasonality. We're not. We're all about that 12 months perspective income. So that doesn't matter. So once you give it to us, we're looking at it. And once we've approved that enrollment, we don't request any more information. If for some reason something changes in the circumstance, I tell you just to be mindful and kind of just your moral compass. If something doesn't meet the spirit of the program, we do appreciate you letting us know. For example, we've had situations where, unfortunately, this actually is a real scenario that a member had a buyer that had a second job. They put in writing that they quit the second job and they weren't going to continue it. They only had one job, so we excluded that income. And then once they got the grant, they decided that they were going to go back to that second job, and they actually were working more hours, and they actually received a pay increase. So that's kind of an example that's very unique. I don't think that's a one size fits all, but just be mindful of, you know, that these programs are income based, and we just want to really make sure that it's getting to the right home buyer. So that goes back to the tell us if incomes change after enrollment. Just kind of use gauge your gauge what you are looking at, because we're not talking directly to the home buyers. But please do queue up the home buyers before we release money. That way you can determine income eligibility. And if for some reason you're getting a snarky error message, delete the household member from the households and then just do some corrections that way. At the end of this PowerPoint, I do have our YouTube channel that you can access if you ever have questions that are for technical assistance and how to enter an enrollment. Between Kevin, Jack, and Isabel, they did an awesome job creating these little YouTube clips to get you that. And we try to factor in as many income scenarios in there. So definitely take some time before the April 1st release. That way it will help you. We used to have a manual that had screenshots. We had to update it every year. Nobody was using it. And I know some people have asked to bring it back, but I feel like the YouTube videos are far more transparent. And then if you're just really, you know, avid at reading the income guidelines, you kind of marry the two. And I feel like that's a little bit more digestible. All right, so this is our time for questions, but I do see that we have some other ones, so I'm going to go through those. But if I haven't covered anything specifically, we have plenty of time, so feel free to type in some questions. Are there any exceptions for non-first-time homebuyers to get EBP? For instance, they're below 80% but not a first-time homebuyer. So the answer is no, unless they have not owned a home in 3 years or they are a single displaced homemaker. Is the maximum points 2%, or is that the most the interest rate can reduce with the points? So good question. We have it written in 2-point percentage format. It's 2 points, and if for some reason it's the lesser of the two, if for some, depending on what that person's loan amount is, if that can get them a 2% reduction, it's just we can appreciate that it all depends on that loan amount, if there's any loan pricing level adjustments. And as I mentioned, if for some reason they want to buy down that rate further, maybe they do have a cushion. They're able to do that as well, because we do understand that from a short-term affordability, that a lot of people are doing that. And always reach out. That's something that our team is happy to walk through those numbers with you. Is the I think this is a similar question about homeowners insurance. Is it considered a prepaid? So yes, anything that's in that prepaid section, EBP or how will cover. What is the maximum DTI? So the maximum front housing ratio was 37%. We haven't changed it in a couple of years, but as I mentioned before, we will accept compensating factors. And if for some reason you can't meet the 3 compensating factors, as I mentioned, what is their current rent? If they have minimal back end debt, do they have at least 2 to 6 months reserves? We don't just accept that you got a approved eligibility rating in your automatic underwriting system. We would need something from your institution really saying that you see the full picture, their ability to repay. Are the income limits different than MHP? Yes. So because we're all of New England, we are HUD because our regulation is all tied to the HUD area median income limits. And as I mentioned in the slide, I believe it was right here. So it's always persons and family. It's not median family income. And that's different than a lot of programs that are out there. I believe MHP has their own limits, whether they grab it from the family median income. There are some other mortgage products out there that might operate this way, but we are all in for by person in the family. All right, so. And may I please ask if the 37% front ratio off the AMI calculation, or is it off the loan qualifying income? Yes, that's a great question. So our system is going to specifically look at that 37 for what you enter as the income for our enrollment process. So it is, if you're not using all the income sources, our housing ratios might be different. Do you include rents on multifamily homes? Yes, we do. We do include that. So if you have a 2 to 4 unit, we include the rental income, our guidelines. I believe it might be on page 12. It talks about that we'll either use the most recent lease, or if for some reason you don't have a copy of that because they're a tenant at will, we'll look at the appraisal and we'll use the market rent or the current rent verification that the appraiser notes. We do have some caveats of when we would exclude the rent. I definitely caution you to take a look at all of that, because if you're using it to qualify for your mortgage, but you're looking to omit it for us, if you're using it, even if it's vacant, we're going to use it. So that's why we would defer to the market rent on an appraisal. Okay, this is pertaining to the grant. Does it have to be paid back if it's sold within the first 5 years? So we do talk about this at time of disbursement, but you actually can find it on the EBP page under the FAQ as well as the how. So there's a 5-year retention period, and if the buyer sells during that 5-year period, they do potentially owe the grant money. They'll never owe essentially the entire amount, because we do it on a pro rata, which is different than if you're calculating a traditional first mortgage payoff, and we factor in from the day that they bought the house, from the day that they're selling. We look at it in months versus days. It's a very intricate calculation that the Federal Housing Finance Agency has put forth that we have to follow. We include their household investment, so all the money that they put down to cover closing costs, their earnest money, and any costs that they have to pay when they're selling the property. If they want to refinance, that's totally fine. We subordinate. We don't have a rigorous underwriting package. You just need to execute our subordination template, and EBP has its own as well as how. Can a co-borrower be added after submission? Yes, that can be the case. I guess I would just say that if you're adding a co-borrower, and they're going to live in the property, and for some reason maybe they don't qualify until after the fact, you just really want to make sure that you're having that conversation with your customer, that it's everybody that is going to reside in the property. We're all in for income. If it's a non-occupant co-borrower, I recommend looking at our household composition on pages 3 and 4. Are these programs integrated with any LOS system? So unfortunately, no. But the disclosure that we have in here, it's in a PDF format. We do allow for e-signatures for that, as well as our zero certification. So for example, if you use Encompass or Doc Magic, you can configure it to your LOS systems, and you can, write your business rules and mapping to be able to take our documents and put that in when you're sending out your loan package to your customer. All right. Okay. Regarding no refund of END, does that only apply to EBP if the borrower puts more than 500 down on how the EMD is greater, and can they receive a refund towards other closing costs? So, um, if a buyer has put down the money and then they have contributed more than whatever the minimum requirement for both programs, it has to stay in the transaction, and our cash back. You cannot have a home buyer receive more than $250 cash back, and that's because it's tied to our regulation. Um, this program is only for purchase transactions. It cannot be used to construct a primary residence. So yeah, so there does have to be a property um, on the land. You can't just use it to purchase land and then be able to construct entirely. If you have a new construction unit that's in process and it's with a builder, and that PNS is locked in, and you have the plans and all that, and you know when it's going to be completed, that's a totally different scenario. Will this slideshow be available? Yes, it will. So in the handouts, if you were late at the beginning, we have them in PDF format. We're also recording today's session. So if you have people that want to listen to today's webinar, we'll have that on our website about a week or so. And then it's always a good reference to have, even if you've taken it and you just want a little refresher. All right. Is child support still included if the borrower is not receiving the child support? That's an extenuating circumstance that we would need something in writing just explaining the situation. Child support, we see different situations that if they're, in arrears, whether it's a lump sum, we don't include. If they're in arrears and it's tacked on to the monthly, we would still use it. But if they're just not paying it all together, even though there's a court order, and maybe unfortunately there's no garnishing, then we would just need something in writing confirming that they're not receiving it to exclude it. Okay, so who do the notifications go to on the member action required? So at time of application, your institution was able to select up to 4 people to get correspondence. Those 4 people get notices about when we've released money, what's available, if we've approved an enrollment, if we've put it in member action required, and if for some reason throughout this year, if your contacts change, maybe someone goes on vacation or someone leaves, you can just reach out to myself or the team and we can make those updates for you. If a borrower was not a first-time home buyer and we're using how, is education still required? The answer is no. So if they're not a first-time home buyer in how, they do not have to complete the education. You will be asked if they are not a first-time homebuyer and they own a primary residence. And this is just getting into the disbursement, but to give you just knowledge, uh, you know, in advance, that we do provide documentation. If they still own that property, we're going to need that closing disclosure at disbursement. So just something, if you come up to that scenario, that there's some additional documentation that we need. All right, let's see. Please explain non-occupant borrower income. What income do we use for them? So if you have a non-occupant co-borrower, we don't include them in the household's head count and we don't include their income. However, if there are certain factors that you're putting this non-occupant co-borrower on your mortgage, and it might be due to credit score, and that's something that we don't look at for our EBP and how programs. But if it's to lower that housing ratio to get an approved eligible, and your compensating factor, for example, is we have a non-occupant co-borrower that's going to contribute $500 a month toward their mortgage payment to make it affordable, that's a different conversation. We would see that as income. We wouldn't include that person in the household, but that home buyer who's going to live in the property, we would consider that as supplemental income to what they selected at their EBP HOW disclosure. And do we have where do we access the approved lists for homebuyer education? So it is on our website. If one of my team members could put that in the chat, that would be awesome. Unfortunately, I only have a maximum allotment of 5 handouts in here, so I tried to cram as much as I could in here. What if the borrower is separating? Do we use current household income or just the borrower that will be on the application? If they're separating, we would need a formal separation agreement. If for some reason you need tax returns, you would just want to put some information on there that they're separating. So that way, if for some reason they were self-employed, we want to make sure that we're not over including income. But if they're separating and they're going to live in the property, that's a different conversation. Like I said, we're all in for everyone who's going to live in that property when they close. Are non-warrantable condos acceptable collateral? So we don't care about non-warrantable condos. We have no restrictions on that. The condos, they can be a multifamily conversion. They can be 5 units and up. We have no restrictions. Can we register a customer prior to 4/1? No, you cannot. You can look on our website at all the documentation, the disclosures that I provided in here, and you can begin sort of kind of pre-qualifying, but the website will be made available on 4/1 that you can be able to enter in a home buyer. If someone's been working full-time but got laid off during the process, do we consider the unemployment benefit? Good question. So if for some reason, whether it is they were working full-time and then we had a file in process, but then they're unemployed, we do consider unemployment as income. We do have an unemployment section that gives detail of what documentation that we need, something typically directly from the state that's showing what's the maximum that they can collect and what is that weekly benefit. And if for some reason they're working full time and then they get laid off throughout the application and they're not receiving their wage earning, then we're really only using the unemployment benefit because we can't predict when they're going to be employed unless they, for some reason, they had a job offer that was signed offer letter from an employer and that home buyer that they were going to be starting on X date. We do see that too. So if you have any contract people that have new employment, even if you're not seeing a pay stub yet, we're gonna use that contract document, and whether it says they're getting $50,000 a year annual salary, that's considered an income document for us. So we do include that under our wage employee section. When are the approvals going out? They're going out next week. We are still intaking the annual agreements, but the award notices will go out then. What time do funds release on those scheduled days? Great question. No, so I didn't say that. They go out at 9 o'clock in the morning. Okay, would you repeat the answer to this question? Is bonus income annualized? So it depends on what type of bonus income. If it's an annual lump sum, we would need that pay stub to specifically call that out, or a Fannie Mae VOE or a letter from HR. If it just says bonus income and it's on a pay stub and it doesn't have any other information, we're going to assume that it's going to be projected out. So that could make or break if somebody is going to qualify for EBP or HOW. Are tax returns required on all applications? So no. So everything with the exception of a W-2 earner. So self-employment, we have a rigorous section that we need 2 years tax returns. If for some reason they have a history of collecting unemployment, we do use that as the information. If they're getting Social Security, other unique scenarios, alimony, we don't count them as a household. I think that might be a part of non-occupant co-borrower. We don't count them as a household member, but we do count their income. Yes. So if you're talking about non-occupant co-borrowers, to that scenario that I mentioned about if someone's going to give $500 toward the mortgage, then yes, we don't include the person. So that's what you have to emphasize. So naturally, if you have one borrower and then you have a non-occupant co-borrower, you find out later down the road it's going to give money. That's still a household of one. So your income threshold is not increasing. It's going to stay the same. Does the lender's program still need to offer an incentive or discount? So for EBP, we require, that's in our regulation, a member concession. So that could be a lender credit, that could be a reduced below market interest rate, waiving a reduction of fees. And if you're offering both programs, that's fine. If you want to offer it for both, we have no stipulation, because we do understand maybe if you're using both programs that you want to be thoughtful to your customers and having them align with one another. So yes, we still do, and you can find that information in our EBP HAL procedures. The handouts are not going to get emailed there in the handouts tab in PDF format. All the information is on our website though, but if there's something that you're missing, feel free to reach out to us. How long are homebuyer counseling certificates good for? So it is it's 24 months from either when you submit the enrollment or at time of closing, because it all depends on when you're closing and if this customer received the education and counseling well in advance just to prepare. Can grant funds used to be paid for escrow holdback? So if it's an escrow holdback that's specifically to the rehab, if you're using the grant funds toward that, yes, we require that to be held in escrow. But if there's an escrow holdback for something prior to like a walkthrough, no. Okay. All great questions. I have another question about rental income. Do you use 75% of the rental income or the full rental income? So we're 75%. Okay, baby born in April, can it be counted toward the household? So yes, we don't force you to disclose unborn children or prospective children that might be coming in the future, but essentially if that customer wants to disclose, let's say that, on paper they're a household of two, soon to be a household of three, we would consider that as a household of three. What's the best way to document counseling that was included in training when reviewing the certificate of completion? For example, is there a way to tell if that was taken on the certificate? So typically, if it's through an approved agency on our list, they require counseling. It's not just education. So that's why we caution and recommend, if somebody wants to do the education online, that they go through an approved source such as MAHA, which was the example that I gave in that framework certificate. But if you're ever questioning that, feel free to let us know and ask about that. All right. Do you count workman's comp as income? Yes, we would. I would need a little more detail about the circumstances and the nature of continuancy. If it's some information that is new, or you know that it's going to be in the foreseeable future, because as I said, that we're perspective, feel free to reach out and email myself or my team if you have a live file that you want to kind of talk through. How would you submit that buyer? Will there be additional training on the enrollment submission process? So no, this is a training. We do offer the same program in a couple of weeks, but I do recommend looking at our YouTube channel if it's specifically about how to enter somebody. The team, Jack, Kevin, and Isabel, have done an awesome job at creating those tutorials. Do you have to pay back the grant after 5 years? No. So it's a grant, not a loan, and it is forgivable after 5 years. So once that 5-year retention period has concluded, the buyer doesn't owe anything, and we talk about the what we call our member monitoring in the disbursement training. When can we expect the 2024 income limits? Usually they're around the end of April, early May, and we just like to make sure that we have a nice clean cutoff. I think last year we started them May 15th. So just stay tuned. We get notified just like everybody else does when they're available. And once we know, we'll look at that and we'll have our system code that, because we don't have a direct, data dump. We have to do all that information upon HUD releasing them publicly. And thank you, Jack, for adding some of the events and the homebuyer education. All right. And are all the updated documents on the website? Yes, they are. So review our 2024 materials. If you have any documents from last year, please purge it. Sometimes if you see anything that has an effective date of 2023, reach out to your IT department, because sometimes the cache setting might default to that, but we have updated every single document on our website. Can the EMD be less than the required borrower contribution for house? So yes, at earnest money deposit, let's say maybe they only have half of that 1.5%. We're going to expect that other amount to be captured as the cash to close. Do you have do you discharge the grant after 5 years? So yes, we're going to talk about that, and I recommend signing up for our disbursement training once a homebuyer is out of the retention period, or even if they're doing, if they're selling the property and there is repayment. Your institution is always required to, number one, monitor the grant and responsible for the discharge, because the way our mortgages and notes are written, we're only the funder of the grant, you're the lender. So even if you sell that loan on the secondary market, you still have to monitor. Will you have lift up home ownership this year? So yes, we will. Stay tuned for that. We ideally wanted to onboard all three at the same time this year, but because lift up home ownership is tied to special purpose credit programs, we had a lot of analysis that we needed to do to make sure that we met our benchmarks for that umbrella program. So stay tuned. You should see something in the future. It's going to every CEO, CFO. If you offered lift up last year, you're going to get that notification. And then it also included the contacts for this year's EBP HOW program. So stay tuned. All right, we're coming up to the end, but I think we have answered everything. What I would love to do is do a poll question to end today's training. So feel free to weigh in, test the brain in the afternoon. All right. Give it a little bit more time. I think we're almost at 50%. Don't worry, this is anonymous. This is just really a way to test your knowledge for today. All right, so I'm going to close that. So the answer was all adult household members 18 years or older. And then I have one more question. Can a home buyer be swapped out with another home buyer in your pipeline? So far, I like the responses. I'm going to keep it open a little bit. All right, closing that. So no, each enrollment is home buyer specific is the answer to that. I do have one more question before we conclude today's training. Lender incentive offered to borrower still required for EBP? Yes, that is still a part of our requirement. And at time of application, your institution had put down some examples of what that member concession would be. You could always deviate from it. You're not married to it. And that's why some people might select one, they might want to swap it out, or they include multiple just in case they're unsure. It just kind of depends on the nature of the loan. But yes, it is still required. Well, that concludes today's training. Thank you so much. And please reach out to this awesome team. Can't say that enough. So Livia Bork, she's our Assistant Vice President and HCI Operations Manager. Then myself, Caitlin Mulhern, I run all the homeownership programs. I have three awesome analysts who work on our homeownership team, Jack Newton, Kevin Ryan, and Isabel DePagna. And please feel free not only just to reach out to me, but everybody. We really take pride in our customer service, and we know that it takes a village to get home buyers into the market, especially in New England and especially with this interest rate environment. So thank you so much. Enjoy the rest of your day.